At 1,210 crore rupees, the PAT for L&T for the first quarter is in line. But I'm not going to jump to any conclusion and say those are good numbers. We just had the first flash. The number that we were working with was 1,226 crore rupees. 1,220 is what they've delivered. The key for L&T, as has been for any quarter, is going to be the guidance. So what we are penciling in is 12 to 15% revenue guidance, a 10 to 12% growth in order inflows, and a margin with an upward bias of up to 25 basis points. And I think that's going to be, these three numbers are going to be the key with which the market is going to hand out its verdict on what L&T's performance is like. So at 1,210 crore rupees versus the expectation of 1,226, largely those numbers are in line. I wouldn't really call it sub-expectation or a big shocker at that. Gaurang Shah is on the phone line with us. At 1,210 crore rupees on the PAT, Gaurang, 21,280 crore rupees on the revenue. That is a little bit our estimate. Your first take on the L&T numbers.
So, Aisha, I think there has been a slight disappointment. Would want to wait for the segment-wise breakup. I guess what we are speaking about is the consolidated numbers. So, would definitely want to have a look at the breakup, especially from the hydrocarbon business side. I would like to see what are the numbers on the hydrocarbon side. But I think these two numbers, I believe it's a slight bit of disappointment according to what our estimates are.
Right. Optically that's fine. But I think the order inflow number, which is the critical number to base judgment on these results, is looking at 36,142 crores. If I compare that to the base of the same quarter last year, I think that number stood at 26,000. So that's a decent bump up. Gaurang?
That could be true, but if you look at the problem, Tanvi, with cap goods engineering space is that we normally end up comparing quarter-on-quarter numbers, whereas I believe we should definitely do it a little bit longer so that you can have a clear-cut view, because projects are such in cap goods engineering hydrocarbon that they may take a little bit of longest gestation period. So order book is healthy, and I have absolutely no doubts in terms of the capability and capacity of L&T in terms of execution. But I think the run rate should definitely pick up going forward.
Essentially making the comparison year on year, Gaurang, and I'll take that conversation forward. Avinash Gorakhshekhar also joins in with his perspective. To my mind, why we will give out the verdict, and I think it's not a market difference from the comparables. It seems that the numbers are largely in line with estimates, consolidated sales. I mean, on that base, a 2,000 crore would not dent the outperformance like in a major way, would not like swing the pendulum in the direction of outperformance in a major way. It's really the order inflow picture which looks encouraging, where close to about $1 billion, $1.25 billion has come in from global deals. And the actual order inflow stood at about 26,300 crores in Q1 FY18. L&T had announced orders worth 26,900 in Q1 of FY19. And add to that, the additional 10,000 crores has come in through global deals. I think that puts the position in quite a good stead for L&T in terms of order inflow, because that's the variable that the market latches on to the most. Avinash?
Yeah, definitely. I think, order book inflow is one input which has been slightly better than what the street expected. Our sense is that, I think profitability has been slightly disappointing. On the bottom line, I think we'll have to see what has been the reason the profits were slightly lower than what street expectations were. Our sense is that, the market would obviously look at what kind of management commentary, the management actually delivers in the conference call today. But overall, I think the order book inflow of 36,142 crores is definitely encouraging. What kind of, traction we see in the second half is more important, and obviously what kind of execution, milestones the company maintains would obviously be a very crucial input to watch. But overall, I think the weakness in the stock could possibly, stop once we get little more clarity from the management on the kind of growth commentary, at least for the next couple of quarters.
Could you quickly go across to Avan, and Avinash and Gaurang both stay with us. Avinash, Avan, what is the segmental breakup, if you would have a breakup of the top line figure, what it constitutes for each and every segment, and if you have anything on the guidance?
Well, nothing on the guidance so far, but in terms of the numbers, I'll tell you, Aisha, it definitely has been a very healthy quarter. Remember, we were going in with high expectations and they've succeeded. So surpassed expectations on the EBITDA front, on the revenue front, on the margin front, and profits have come in line with street estimates. You have the total order inflow as well, which stands at 2.72 lakh crore rupees. And in this quarter gone by also, it has exceeded what the street was expecting to come and had a healthy 36,142 crores. Now, yes, let's talk about the individual segments. The infrastructure segment secured orders to the tune of about 19,000 crore rupees, and they've registered an increase of 16%. So that has sure been healthy. For the power segment, it's been a little bit muted this time around. And that's largely on account of the overcapacity and the aggressive competition that they've witnessed in the sector. So it's been a little bit flat, that you'd have to say, for the overall power segment as a whole. Heavy engineering segment as well, that has been the key, and that has really been where they have been receiving quite a few orders as well. And there has been quite a bit of restructuring that's gone through in the heavy engineering segment, and that has seen quite a significant increase. The international orders here have constituted close to 92% of the total order book, and they have secured fresh orders in this segment to the tune of 1,400. This segment in the heavy engineering segment have improved to about 36%. Defense engineering segment, that's been newly introduced as well. That was part of the heavy engineering segment earlier, and this too has seen a healthy order book in this segment of about 11,599 odd crore rupees. The ENA segment has registered a growth of about 12%, standing at 3,061 crore rupees. So that too has been healthy. Hydrocarbon segment order inflow has been largely driven by the receipt of orders from the fertilizer sector, and that has seen an inch up of about 23%. Remember, we were also depending heavily on the IT and technology services, financial services segment revenue to drive the overall revenue figure up, and this one has come in healthy by 31% for IT and technology services, and the financial services also has seen an up move of about 33% on year. So that too has contributed to the growth. And I think I've run you through pretty much the individual details. The management has said that the recent surge in oil prices will incentivize their infrastructure and hydrocarbon capex in the Middle Eastern region. The public spending by the government and the state governments, etc., is going to lead to building of their overall infrastructure. They're going to focus on profitable execution of their order book as well as cost competitiveness going forward. And I think if I had to assess it, it's been a very decent set, even when I'm looking at the individual segments.
Yeah, and the consolidated margins at 10.3% is higher than the estimates that you'd run at about 9.5%. So that's encouraging. Segmentally, things are, on every parameter, things have looked up. The order inflow growth of nearly 40% year on year is not something that the market would ignore at all. Can't, right? Because it's commanding that kind of growth in order inflow position. Mayuresh Joshi joins in with his perspective. I'm still awaiting the guidance numbers on order inflow. They're expecting 12 to 15% growth in revenues, and in order inflows 10 to 12%, which is, early double digits. Not a bad sign if they actually come out with that sort of, expectation or target for the future, Mayuresh. They haven't yet. We are waiting those numbers, but even so.
Oh yes, I think with that caveat, Tanvir, I think they had given a one-year view in the quarter gone by with the assumption of a 10-12% order book growth in FY19, a revenue growth of 12 to 14%, and a margin improvement guidance of 25 bips. So what they have largely recorded in terms of top line, I think the top line growth has been phenomenal for L&T. The order flows that have probably come through, and as Aman was mentioning, infrastructure and domestic E&C, I think, have seen a reasonable amount of order inflows as well as execution being done at a very fast clip. So I think the order flows of 19,000 crores in this quarter should hold L&T in good stead. Power has been a little bit disappointing, but there are expectations of the flue gas desulfurization projects, which are almost worth 5,000 odd crores, overseas projects in excess of 12,000 crores, which can in certain ways provide respite. And the other elements in terms of heavy engineering and hydrocarbons, with oil prices moving up, there are big expectations in terms of the markets in the Middle East and the international order book actually holding up. So I think interesting set of numbers. I think the top line was very, very encouraging. The margins, as you rightly mentioned at this point of time, again, very, very good at 10.3, which probably means that the 5-year strategic plan, Lakshya, which they have planned out to take margins to 11.2% by FY21, by focusing more in terms of domestic PNC execution, by doubling sales, in fact, doubling their ROEs as well from 12 to 18%. I think the management commentary is very, very interesting. But very good top line, good margins, and a good order flow on L&T.
You know, when we're looking at the segmental performance, perhaps the only disconcerting factor is the power segment that's been a little bit muted, and the management has said it's due to overcapacity, it's due to the kind of aggressive competition that they've witnessed, and they're also, admitting that they will continue to face business headwinds due to the increased competition here. Gaurang, would just like to get in your opinion, after having had a look at the press release and the individual segmental performance, are you worried about the power segment being a bit of a lag?
Thanks for that, Avan. So I don't think we should worry about power sector, because I think going forward, Avan, what the government is implementing in terms of policy changes for power generation, transmission and distribution is going to throw in tailwind positives for companies like L&T. Point number one. Point number two, I think recently concluded meeting of the oil ministry and the oil minister, Mr. Dharmendra Pradhan, and what he mentioned about under the NELP. I think Northeast India has got tremendous potential in terms of exploration. I think that's where you will need expertise and experience of L&T. And third, what I'll be excited to look about in terms of earning visibility going forward is the defense. And fourth would be infrastructure. So I think these four primary business verticals could definitely throw in positivity. Since we are talking about L&T, I think it's prudent on my part to give a disclosure that we hold a positive coverage on L&T from a long-term point of view. And I think the back of the envelope calculation long-term target stands at about 1650 on L&T. Avan.
Thanks for analyzing L&T. That sure is going to be one stock that we're going to be looking out for when markets do open for trade come tomorrow. For now, we're going to wind it up on this edition of Closing Trades. It's a goodbye from Tanveer.